have Defiont on digital assets with the UK and European update. As we march forward into 2021, the acceleration of digital assets and their mainstream adoption is coming into play. And as a gentle reminder, today we start with this.
Many governments, including the UK, Sweden, Hong Kong, Australia, and the US, are all exploring ways digital currency could work. The European Central Bank is working with the European Commission in experiments to consider the benefits of a digital euro. It'll decide whether to launch the digital euro in mid-2021. Sweden, which has one of the lowest usage rates of cash, launched a pilot program for its digital currency known as e-krona in 2019.
Now, Sweden has been the poster child for several years now, and as a result, they are set to extend their trials. Swedish bank Sveriges Riksbank have proposed more developments towards the e-krona. In a recent article, they state the world's oldest central bank is to extend their digital currency project until 2022. And according to the bank, this will lead to an increase in its knowledge of the technical powering of the digital currency. The financial institutions will also continue developing other products focused on improving digital currency platform in terms of performance and scalability. Next, as we move to Spain, we've talked a lot on this channel. If central banks are going to be issuing digital currency to the retail investor, then what for the banks? Their business model has been totally disrupted by this new sovereign e-money that will be issued by the central banking fraternity. Traditional banks are going to have to revamp and revitalize their business model to offer different services. BBVA, Spain's second largest bank, will soon launch crypto services. The bank currently has about $840 billion in assets and is poised to enter the cryptocurrency trading and custody space, according to two people familiar with the plans. And this crypto custody is set to be a real opportunity for banks to get involved in this digital asset ecosystem. So there is a clear path being forged that if central banks are going to issue digital currency, then the banks could play a major role by custodying that cryptocurrency, pretty much in the same way that they custody cash in the banks today. On further reading, it says one source with knowledge of the plans told CoinDesk that the BBVA is launching a Europe-wide cryptocurrency initiative from Switzerland. It has been expressed that there are still some compliance hurdles to overcome, but they all should be live by the end of next month. As we move into what's actually happening in Russia, Russia's central bank have just stated that 80% of the feedback on the digital ruble was supportive of the project. In the latest sovereign to express an interest in digital currency, Russia's central bank told CoinDesk that over 80% of feedback on the digital ruble was supportive of that project. The central bank further stated, "We're keeping on with the plan. At this point, we're in the process of developing the design of the digital ruble. The project is set to be unveiled in October when the Bank of Russia published an analytical report outlining the possible design of the ruble-backed CBDC. And some of the benefits highlighted in this report include the ability to track government spending and more effectively provide digital payment options in areas where the internet connections are very, very scarce." The clamour for central bank CBDCs hasn't gone unnoticed. There are many countries, many sovereigns that don't have the infrastructure, but are seeing this acceleration into the move of e-money as an opportunity to present central banks and banking in general as the go-to places for improved and enhanced financial services.
And emerging economies have introduced pilot programs. In 2020, about 60% of the world's 65 central banks surveyed said they're running experiments on CBDC. That's up 18% compared to 2019.
As we are partway through 2021, I would say that number has edged up to about 80 to 85%. This thing is coming. There's no stopping central bank digital currencies. Despite these developments, people will still be uncertain what actually is a CBDC.
A central bank digital currency, or CBDC, is a digital form of a country's currency operated by the central bank. Similar to cash, the central bank would issue its digital currency to allow people to make everyday transactions. The digital dollars would be issued by the central bank and held directly in a citizen's digital wallet. Instead of printing physical money, the central bank would use electronic coins or notes. The digital wallet would be accessible through smartphones. Governments could also decide whether they want its citizens to create a direct account with its central banks or operate the digital currency through existing financial institutions.
With the majority of the globe rushing to get into central bank digital currency, it won't be too long until the central bank digital currency is coming to a sovereign near you. Next, let's talk about Bitcoin. You'll have recently noticed the euphoria, the mania that's recently gone into Bitcoin in a 180-degree flip. It seems that people's view on Bitcoin has suddenly changed to something that was a negative into a must-have asset for your portfolios. As we take a quick look at the 7-day chart, as you can see, Bitcoin is a lofty 60,260. But for those who see something in Bitcoin, this is a once-in-a-lifetime opportunity.
Bitcoin is booming.
We are going to look at cryptocurrency and or Bitcoin in terms of currency to transact.
Believe it or not, we've sold 17 cars, Bentleys and Rolls with Bitcoin.
Musk is driving so much of this market, it's fascinating.
There's been a lot of news about digital currencies lately. Companies like Tesla, Square, and PayPal have been getting into cryptocurrencies in a big way, with big billion-dollar bets on Bitcoin specifically. Whether all this turns Bitcoin into a viable currency instead of a speculative investment or a store of value remains to be seen. Big-name investors and big-name companies are now pouring money into Bitcoin. It's adding mainstream credibility to the famously volatile digital currency. Citibank recently said Bitcoin could become the, quote, currency of choice for global trade. All of this is forcing the Fed to get more serious about the digital dollar.
Now, I have my doubts whether Bitcoin will be used for trade in that sense, mainly because the scalability, sustainability, and also the speed. As we have just seen with these very, very lofty prices, it's clear with the price appreciation, people see Bitcoin as maybe a store of value, like digital gold, maybe because of its scarcity. It is clear to me that the central banks have one view, and they really want to deter you from the notion of owning Bitcoin. The Bank of England Governor Andrew Bailey warns that Bitcoin's days are numbered. He states digital currencies such as Bitcoin will not last long in their current form due to the lack of design and governance. The threat posed by Bitcoin to central banks is a real one. Now, that message is amplified by European Central Bank head Christine Lagarde, as she tells us what she really thinks about Bitcoin.
Well, first of all, I think it is not a currency. I'm very sorry to say. I know that some people argue that it has two attributes of the three that constitute a valid currency, but I think it doesn't. It might have one. It certainly doesn't have two. And it doesn't have the stability that would be required in order for it to be a currency. It's one that was established back in 2009 by libertarians and the hopeful of a completely decentralized universe that would be completely anonymous. I think it has in many ways been exploited in a funny way, yes.
Now, I find that last comment by Christine Lagarde of the European Central Bank very disingenuous when you factor in the fact that cryptocurrencies were born out of the misdeeds and misdemeanors of central banking, the mishandling, the misallocation of resources by central bankers into the financial crisis of 2008. There has been more fraud, theft and criminality, money laundering and illicit behavior through many decades before even cryptocurrency was even born. The development of all these cryptocurrencies and this digital ecosystem is as a direct result of bank policy failures over the decades. Listen further as Christine Lagarde seems to lay the hammer and squash the threat totally of Bitcoin because she knows what it could do to the central bank system.
How likely are the world's central banks to hold Bitcoin as part of their reserve currency?
Very unlikely. I think I would say it's out of the question, actually.
One benefit central bank digital currencies could provide is lowering the cost of cross-border payments.
Now, this is something that Bitcoin simply cannot do. And with full disclosure, I'm a big fan of Ripple, the Ripple XRP ledger and XRP that can deliver those low costs associated with cross-border payments. And as you can see from this chart, there is absolutely no contest whatsoever. As we move across to this next article coming out of France, The Bank of France is likely to prefer XRP over Bitcoin and Ethereum. And now for those of us that have the eyes to see and the ears to listen, this was completely obvious that a technology like XRP and the XRP ledger as a possible platform for the CBDC. What do the big boys think? What are the big hedge funds, the financial institutions, aka the smart money? So what is the smart money actually doing about Bitcoin? Especially when we find that those that have been exposed to Bitcoin, let's just say they have been very well rewarded.
What do people want? Do they want a job, or do they want to never have to work again? If what you want is Social Security and you want to be able to retire early at age 40 and paint and live with your family and enjoy your life, you don't want cheap pizza, and you don't want free streaming YouTube and Netflix. That's patronizing. I don't want to work till I'm 80 and have cheap YouTube. What I want is to work till I'm 40, buy a bond, and stop working. And if I have to buy an asset. So if you're a laborer, if you have a job and your salary didn't go up by 25% in the last 12 months, you got weaker. You got poorer. It's patronizing, and it just reminds me of this one famous phrase. All of our research shows us we can't tell people what to think, but we can tell them what to think about. And so if I just repeat CPI, there's no inflation, there's no CPI, CPI is inflation, there's no inflation, CPI, there's no inflation, we're waiting for CPI. If I keep repeating that, you'll agree with me. But meanwhile, the Fed prints $1 trillion, the stock market spikes, and people don't say, oh my God, assets have inflated. There's hyperinflation in assets. What they say is, oh, we're brilliant. The stock market's going up. Isn't that great? Well, it's not great for people with cash.
It is clear that people's purchasing power has been absolutely destroyed.
I have to say the Federal Reserve and the EU Central Bank have tripled the cost of capital. And that's made your investment decision much easier. What they've done is they put 95% of every company underwater. If you think that the currency is going to weaken by 20%, all you can do is buy scarce assets, trophy assets, scarce art, Bitcoin, something which is not correlated to fiat cash flows, because everything else has been debased to the point that 1 million pages of information and strategy are all irrelevant. The models are all irrelevant. Everything you've learned in 30 years is all irrelevant. Right? Bitcoin's a bank in cyberspace. It's a hard asset. I take my money, I convert it to Bitcoin, I put it in a bank in cyberspace, and then I'm indifferent to how much currency gets printed by the Federal Reserve.
We have talked extensively a lot on this channel about the dangers of negative interest rates, NERP. So to extend that discussion, let's delve in further to what actually negative interest rates could actually mean for all of us.
Countries like Denmark, Sweden, Japan, and Switzerland have all experienced negative interest rates for years now. The European Central Bank actually has negative interest rates. So what does this mean for you as a borrower? What will most likely happen is that the negative interest rates that are set by the Bank of England for banks will not be passed on to you as a consumer of debt 100%. So what this could potentially mean for mortgage borrowers is that mortgage rates will stay fairly low for a very long time to come. Now, on the part of savers, it essentially means that you might start to pay your bank to keep your funds.
Now, we've used this same chart on Defiont many times before, but it's great to see other economists sounding the alarm and using this same chart to explain and express the debasement of currency and what it will mean to individuals as central banks keep devaluing and debasing the currency.
Holding on to cash or having your money in a basically savings account is not going to deliver any return whatsoever. And even if inflation is low, you're going to see that basically money is burning in your account.
What kind of a society and economy are we looking at if this continues in the medium to long term?
Is that negative rates are the destruction of money. It's literally a way in which central banks are generating a massive transfer of wealth from savers and from salaries to the indebted and the risk takers. And it's no wonder that with negative rates, global debt has ballooned, and that at the same time we see that governments don't pay attention to fiscal prudence, that investors are buying stocks at multi-year high multiples. So we're seeing massive risk taking all over the place. And we're building a society that instead of being based on prudent investment and savings as a strong society is, it is based on massive debt and reckless spending.
It's incredible. Daniel, appreciate your analysis as always. Thank you so much.
Thank you very much. Always a pleasure.
As we state often on this channel, it is clear that central banks are going to have to go digital because they have absolutely destroyed money. It is worthless, and taking us all digital is the only option that they have.